Hello, wonderful. This is Tax Coach Susan, protecting taxpayers. How? By empowering and illuminating you with easy to understand tax takeover training. So today we're going to talk about how to save $7,500 in capital gains tax on the sale of a rental. And one way, or the best way to explain something, I think, is with pictures, because pictures can say 1,000 words. There are so many types of incomes. There's passive income, active income, portfolio income, reportable income. Everything looks like a spaghetti. On top of that, for the same income, they call it different names. Like active income is being called ordinary, earned, material participation. Passive income is being called unearned. Active participation income, investment income, portfolio income is being called passive and earned investment. It's hard for people to understand when the same income is being called different names. Today, we are going to talk about capital gains, how it works. So, with capital gains, I'm going to give you the story of Aaron and Kate's income. They sold a property and their capital gains, in other words, their profit was $50,000. So they also worked full-time. The two of them worked and got $50,000 between the two of them after exemptions and their W-2 income. And W-2 income is 0 to 37%. So in their case, they were at 12% tax bracket, which would have been $6,000. The way we do it is we add capital gains, which is $50,000, plus W-2 income, which total here $100,000. So if we look at this chart right here, for 2022, 15% capital gains income applies if the total income is over $83,350 for married filing jointly. Since they are over that amount, because they made between the capital gains and the wages, they have $100,000, which is over the $83,000. That means this capital gains income is activated to pay 15% capital gains tax, which is $7,500. So now we add 7,500 plus 6,000, right? That means that the total tax is 13,500. If you go to your accountant, obviously all this looks just fine, because usually people go at the end of the year and they do their taxes. And so at the cash register, they have to pay 13,500 because they're at the cash register. They are like, this is April 15th and they have to do their taxes. And it's fine, looks fine, right? Capital gains 50,000, the total amount is over, so that's their taxes. However, this is scenario one. Let's go to scenario two. In the second scenario, let's say that they got coaching from Tax Coach Susan. So now they process their taxes in October to run an estimate of their tax bill, and they found out that their taxes will be 13,500, right? But since they have more time and they are not in a hurry, they can actually look at their entire financial map with a new knowledge that they have attained on how taxes work, and they remember that how capital gains work. They remember how capital gains is activated when the entire income is above $83,350 for married filing jointly for the year 2022. In other words, capital gains tax is zero if their total income is below the $83,350. Now they realize that it is wise to add their daughter, who's been helping them manage the rental property during the times they were working on their jobs. They look at the log, their hours, how they've been spending their time, and now they can split that $50,000 capital gains. They split it $33,000 here. And with the $50,000 of W-2 income, now they have a total earnings of $83,000. Are they below these right here? Yes. And if they are below that amount, then it's 0% capital gains tax on the $33,000. So they just saved themselves $7,500. So they only pay the $6,000 on their W-2. And of course, this is not exact amounts. This is just estimates. But the focus is so that you can see how capital gains tax is activated. And if you're thinking, oh, but their daughter has another $17,000, well, not with more time. Remember, their daughter has, for 2022, I think it's about $13,000 of exemption. Plus, she's been running a part-time business that she has expenses. And now she has a loss. She also does not pay taxes. For single individuals, if they're below about $41,000, they don't pay. So between the two of them, they save $7,500 by having a simple understanding of how taxes work. They save that amount. And also, and that's doing their taxes, doing an estimate in October, because that gives them more time to strategize, to make adjustments. Now they have those 3 months. See, they did not wait until tax season. And this is one of the reasons why I'm making those videos, so that we start doing an estimate of our taxes. In my tax takeover training, I actually have a worksheet in one of the cockpits so that you can do your own estimate, because you do not want to wait until you get to the cash register. Accounting is very, very important. Actually, Warren Buffett says accounting is the language of business, and you have to be as comfortable with that as you are with your own nature, as your own native language, to really evaluate business. Doing the accounting, it's very important for your properties, for your business. It is the land of where your business, or where the house of your business stands. So let me just show you really quick. This is an illustration of a business system. You have the house, a marketing house, the taxes house, the administration house, the product or service, your productivity, whatever you sell. Those are the 4 pillars of your business, okay? These 4 pillars of your business is standing in the line of accounting. Accounting is actually the foundation of everything, because you have to look at your numbers before you do your marketing. You need to look at your numbers when you do the administration of your business. Anything that you do in your business, you must know your numbers. Having your numbers in front of you is critical. And a lot of people don't do that. And that's why 45% of businesses fail within 5 years. We need to stop doing that. So for taxes right here, who's the owner? That's you, not the accountant. So you, as a business owner, you're the owner of your tax home. The accountant just goes to do the work. So let's say the accountant goes to your tax home. He organizes everything. So if the IRS agent comes, he finds it all organized and there's no penalties. But you do need to have a basic understanding. So if the IRS agent comes to your tax home, you don't have to do the work because you have your accountant for that. But you do need to be able to go and verify, because who verifies what the accountant did? You don't want the IRS verifying what the accountant did. You want to be the one verifying that. And you don't have to do the work again, but you do need to know, like, for example, if the IRS agent comes to your tax home and he finds the bed in the kitchen, right? And the IRS agent says, why is the bed here? You don't want to be like, what do you mean? My accountant put it here. you need to be able to understand the basics. That's what I mean, So that is why I created this tax takeover training, which is like the bridge. This training is the bridge between you and your accountant and the IRS. This is you here, the solopreneur. This bridge, which is the training, that tax takeover empowerment, now allows you to work to manage your accountant and the IRS, because that's what you're supposed to do. You do not, like the way right now people are, they're blind. The solopreneur is totally blind. And that's why people not just overpaying taxes, but they overpaying medical bills. Yeah. Frustration will chop away years from your life. So understanding how your biggest bill works is critical. You don't have to have the training with me, but do search some sort of training where they train you on how the tax system works, how the accounting system works, and that you get some sort of custom free worksheets, which I call a cockpit, so that you can just plug in the information and you get organized. So that then you can pass an audit, pay less or zero taxes, and you can optimize your time. Time is a luxury we don't have. Learning how taxes work will allow you to have more time, more peace, and cash flow. Yes, cash flow. So really quick, I just invite you to join the tax takeover revolution, because 2023 is the year we're starting a tax takeover revolution, because the IRS has hired right now, or is hiring 87,000 agents. They're actually getting funded $80 billion to make $124 billion. And how are they going to get it? They're not going to get it from the big businesses, because those big corporations have tax attorneys. No, they're going to come and get it from most of you, where you are completely open and you do not understand how the tax system works. So it is very important, because right now, all the way to the year 2031, they're going to be doing massive audits. You want to get prepared. You want to have something in place, a strategy, so that you do not have to worry, so that you are in peace. And if they come and audit you, it's fine, because you understand how things work. So this tax takeover training is warfare against tax and accounting frustration for small business owners. So you're invited to go to susancare.com. My mission is to see one day millions of solopreneurs understand their tax bill as they understand their grocery bill. Thank you so much. Big hug and a kiss. High five. If you like this video, please subscribe, share with your family and friends. I will embrace your inspiring comments. Until next time, remind your heart to smile and fight for your dreams with honor and undying determination. Thank you so much.